Tether proposes 21 Capital, Strike, Elektron three-way merger. Tether Investments has formally proposed merging 21 Capital with Bitcoin financial services firm Strike and Bitcoin miner Elektron Energy into a single entity, according to a CoinMarketCap report flagged on April 30, 2026. The pitch would consolidate three separate Bitcoin-native businesses, treasury, payments, and mining, under one roof, with Tether as the connective shareholder. Bitcoin traded at 76,428, with the broader market in a neutral 40 reading on the Fear and Greed Index at the time of the announcement. The proposal landed during a quiet macro session and immediately drew attention because of who is involved on each side of the deal. What Tether is actually proposing. The merger would combine three companies with very different business models. 21 Capital is a Bitcoin treasury vehicle modeled on the strategy playbook, capitalized through SPAC backing from Tether, SoftBank, and Cantor Fitzgerald. Strike is Jack Mallers' company, a Bitcoin payments and lending platform with a U.S. consumer footprint. Elektron Energy is a Bitcoin miner with energy infrastructure assets. Tether already holds a position in all three. Folding them into a single equity creates a Bitcoin-native conglomerate that owns the coins, mints new ones, and runs the rails for spending and lending against them. The closest analog is Marathon Digital plus Strategy plus a payments business, all under one ticker. The transaction structure has not been disclosed publicly. CoinMarketCap reported the proposal as a Tether Investments pitch, which means the terms are still subject to board approval at each entity and likely shareholder votes given 21's SPAC structure. Why Tether wants vertical integration. Tether has spent the last 2 years moving from a stablecoin issuer into a holding company. The USDT business throws off billions in annual reserve income, most of it parked in U.S. treasuries. That cash has been recycled into Bitcoin mining, AI compute, agriculture in Latin America, and now Bitcoin financial services. Merging 21 Strike and Elektron into one vehicle gives Tether a single public equity that captures three layers of the Bitcoin stack: the asset, the production cost base via mining, and the consumer distribution layer via Strike. If Bitcoin appreciates, the treasury benefits. If transaction volume rises, Strike benefits. If hash rate economics improve, Elektron benefits. A vertically integrated structure lets the same shareholder capture all three without having to time three separate public offerings. There is also a defensive read. Strategy currently dominates the public equity Bitcoin proxy trade with over $40 billion in BTC on its balance sheet. A Merge 21 vehicle gives Tether a competing instrument that institutional buyers can use without going through Saylor. Strike's role and Jack Mallers' Strike is the smallest of the three by balance sheet, but the most important for distribution. Mallers built Strike around Lightning Network payments and has expanded into Bitcoin-backed lending and consumer banking features. The company has not been public, and a merger into 21 would give Strike a public listing without running its own IPO process. For Tether, owning Strike outright through a Merge 21 stake means controlling a U.S.-licensed Bitcoin financial services platform. That matters in a year when stablecoin legislation is forcing issuers to choose between a federal trust charter, a state license, or running offshore. Tether has chosen offshore for USDT itself, but holding a U.S.-regulated subsidiary through Strike provides domestic optionality. What investors should watch: three signals will determine whether the merger gets done. The first is the exchange ratio. 21 Capital's SPAC pricing already values the entity at a premium to the Bitcoin it holds. Strike and Elektron will need third-party valuations, and any haircut to existing shareholders, especially SoftBank and Cantor on the 21 side, could block approval. The second is regulatory. A merger creating a single entity that mines Bitcoin, holds Bitcoin, and processes U.S. Bitcoin payments will draw scrutiny from the SEC, FinCEN, and state money transmitter regulators in parallel. Strike's existing licenses will need to be reaffirmed under new ownership. The third is the Tether parent overhang. Tether Investments sits inside the same corporate structure as the USDT issuer. U.S. prosecutors have probed Tether on and off for years. Merging U.S. domiciled entities with offshore Tether ownership creates a compliance surface that lawyers will want clean before any deal closes.